I can.
I'm using my regular
Yeah, live stream, I see it.
Okay, good.
Oh, you must send me the link to the YouTube. So if I invite people that I could tell them, you know, where to look, because I can't give them the Zoom, but
Okay. All right. So now I'm gonna screen share, guys. So I'm live now. All right. All right, can you see my
yes.
screen? Okay. All right, so the only thing is, like yesterday when I was looking at yesterday's close, that was a pretty big candle, right? And look where we
Yeah.
closed at. So we closed a little bit above. So this, remember we had this as resistance, right?
Mm-hmm.
So, and we created this level as support, and look at it, it touched this level here.
Yep.
It never made it to this support level, but it never fell below this level here.
Mm-hmm.
So you can see how these candles, they literally freaking stop at these levels, right? So this was your floor, which would have been a potential entry. You know, if you were day trading, you would have been able to see the strength. I mean, if you're in the markets, you're going to be able to see the strength here, right?
Yes.
Once it gets to this level here. But my thing is, we closed above freaking 436 yesterday, and I'm like, oh shit, like, are we breaking? You know what I mean? Because that was my cue. You know what I mean? Like, if we get above what did I have here? Like 430. Hold on, let's do this. About 4. This is it right here. If we get above 436.4, then like that's a break, and we closed above that level. But what's crazy is we rejected it.
Yes.
Rejected it. It closed. Yeah. So listen, this is what I'm saying. Like, these levels don't lie, man. You get up here and it was a straight rejection. Boom. But what's happening too is, like, there's a lot of indecisiveness right now.
Yes.
But what's happening is bulls is trying to keep it up, right? And the bears is like, we're pulling it down, we're pulling back. Bulls is like, no. You can literally see like the freaking tug of war in the market. It's insane. You really can't make this shit up. All right, so here, this is where we're at right now. We're below the 200 MA, but what I'm seeing here, guys, I'm telling you, like, we're trying to break.
Yep, the strength.
We're trying to break. Yep. And even though we rejected this area right here, remember, guys, we have to have so many rejections before a breakout. So you have 1 rejection, you have 2 rejections, and now you created a pattern, right? So this is definitely going to be your confluence. I mean, this is your resistance. This is our resistance, which is 436.2. But we've already had several rejections. And you know what's crazy? I mean, we hit the floor here, but as we came down, we never touched the floor back. So anytime I see stocks trying to hit a certain area, like if I have a lot of hits here in the support, they're trying to fall through the floor. If there's a lot of hits here at the ceiling, they're trying to burst through the ceiling. So you got this touch here trying to burst through the ceiling. You got it trying to burst through the ceiling here. And now we're coming back to the ceiling. I mean, we're still below the 200 MA on the hourly, but look at this. This is money flow. So this indicator is down here is chicken money flow. So it just means like how much money is being pushed into the stock right now, which indicators do lag. So I don't really use indicators fully as like my main confirmation, but I do use indicators
me too.
to confirm what price action is telling me.
Yes, me too. Yes.
All right, so let's take a look at let's look at the 4-hour here. And even the 4-hour is trying to create a pattern. So you see how yesterday we had it pointing down? Well, we just came up here. So this is low, this is higher. So again, you know, it is trying to create bullish patterns right now. I mean, we got money flow here too, right? We got money flow coming in. And again, even though it lags, like you see how this candle, you see how this little run up happened, and then this money started coming in right here. This was a lag. because price action is like literally on the money. It's current. So that's why you need to learn price action. So yes, I do use indicators. I do use overbought, oversold, but I only use this like as an assistant. This is my primary. This is like primary for me, price action, because it's the action of price. It's what's happening now. It's what's happening in the moment. That's why you have to learn price action. You have to, because if you don't learn price action and you can't learn how to read charts, you're gonna be behind. You're gonna be depending on catalysts, right? You're gonna be depending on the fear of people and what the CNBC says and what this looks like, right? And then you got all this white noise. So you're going to be relying on, well, maybe this is going to happen because such and such is speaking, or maybe this is going to happen because XYZ, right? Yeah, it's good to have these resources available to you so that you can, discern and break down what's important, because you have to do that. You have to declutter all the white noise and really grab what is the most important, right? But with price action, you can see everything happening in the moment. So it's never going to lie to you, right? It's never going to lie. It's because it's what's happening. So again, I use price action first. And then once price action tells me, what I see, then I use my indicators to confirm. Okay. I don't rely primarily on these indicators. That's why you only see like 2 indicators on my charts. All right, so that's where we are here. And okay, so we're coming up on the resistance again. Now, if we fall below here, guys, this is your area of confirmation, because we are at tug of war, right? We're tug of war. Bears and the bulls and the bears are fighting right now, because you can even see here. See, look at this. This is all pre-market. The bears is trying to come in and push this down, right? And we are opening up below. Now, even if bears come in and push it down, I mean, they're only going to get so far before bulls start coming back, right?
Right.
So and we're still above the 200 MA. So at the end of the day, bulls are still in control. But we kind of are at an area where there's some fighting, right? There's a little bit of fight between the two. Okay, and that's what I look at. It's just bears and bulls fighting for control. That's all that's happening right now. All right. Yeah. Yeah, we're coming down. And this is the 433.48. If we break this level here, if we break down below 433.38, then we know we're taking it to the next support here. Because we're about right here right now, pre-market. So if we can hold this 433 area, then we're coming back to 436 is really your confirmation for a turn, right? If we cannot break 436, we're still in that territory of rejection. Yes. 430, we need to break 436. Yes, we did close above it yesterday, but right after we freaking rejected it and came down. So it was a rejection. And you can see here, guys, it's crazy. Like we got here to the support here, right?
Yeah.
Think about it. We opened up here yesterday, opened up at the resistance. We rejected it. We came back down, right? We closed here. We opened up at support. And what did it do? It came back up to the resistance. Once we got to the resistance, it rejected, and now we're back down here again. That's why finding your zones is important, because it does give you confirmation for entry and exit. And we already know the drill. We purchase puts at resistance. We purchase calls at support. So this is calls going up. This is puts going down, right? And we're in between zones. We're in between zones. We don't keep, especially as a day trader, we don't hold this for long. We only get our little bit of money and we get out. But regardless, we're right here, guys. So even we gotta push back above 436. We gotta push back 436 in order for us to see a turn. In the lower time frames, I am seeing a little bit where bulls are creating patterns right now to keep going. But even if we do pull back here to 431, which is ideal, it's where we kind of want to be at right now. Even if we pull back here to 431, that's still a bullish pattern. We have money flow, right? So I actually want to see us pull back to 431, because I think it's more healthy. You know what I mean? It's healthy. Like I want to pull back. Like come on, bring it on. Let the
Yeah.
bear.
And then we could run back up with it.
Exactly. And then this is a good position right here because this is still an iffy position. Even if
Yeah.
you took a call here, you got to be very cautious because there's still a lot of, tug of war here. But if you can make it back to 431, it's more of a more less risky position because once
Yes.
you get here, like once you get all the way to 431, like all your lower time frames are going to be they're going to be pretty oversold. Like look at 1 hour.
Yeah.
1 hour has been oversold, but I think they're trying to push it back up, guys.
Yep.
It's kind of hard to tell pre-market because it's one of those. It's Friday, and a lot of times
Yes.
with Friday, today is expiration for options contracts, so a lot of contracts are expiring today.
Right.
Plus, Fridays is generally like we always, you know what I mean, like
That's the
recommend to
red day.
traders do not
Yeah.
trade, and my team knows too because every time we're doing free market on a Friday.
Yep.
I'm like, y'all got stuff to do today. I know you
Yep. I
got stuff to do
remember.
today.
Well, I'm starting to be in that mind frame too now.
Really?
Yes.
Yeah, because you were the most rebellious one.
Yes, because Friday used to be my best day, but now when it's too much craziness, I remember you. I was like, mm-mm.
Yeah. Yeah, if you got stuff to do, if you got bills to pay, if you got errands to go run, if you got grocery shopping to do, go do
Yeah.
it today.
I think another thing I adopted, like it's like, when you say, um, from the time you're in and out, like you don't trade more than what, 2 hours or something like that.
Yeah, before lunchtime, especially in the
Yes.
market. Yeah, when you're day trading, I try not to be in the markets after lunch. One, it gets slow between like 12 and
Yes,
1.
and choppy. Yes.
Right, because a lot of, again, these investors, man, they're on lunch break. I'm telling you, you got to look at the market like people,
Yes.
right?
And it goes downhill from there, especially
Yeah,
for the past few weeks. And I'm like, you have the most momentum in the morning.
because of
So,
the overnight. So what happens is that when the overnight, there's a lot of overnight orders that are processing. So
oh,
in the morning time, yeah. So in the morning time at market open, you got these orders that were processed overnight. They're now all hashing out early. So
mm,
that's why when market first opens, you see the volatility. The volatility is crazy, right? And then you got a lot of
yes,
catalysts coming in between 8 and 10 in the morning, right? So you
yes,
have a lot of movement before lunchtime. So if you make your trades before lunchtime, it's the best time to be in
yes,
markets because you don't have to be in there for long. You can get your little
exactly.
$2, $3, whatever your goal is, and you can get out because now by lunchtime it slows down. So then
Mhm.
after lunchtime, you got the settling of lunchtime, right? And then you got
Yes,
power hour. So if you're
which
gonna
is not
trade,
so much power anymore.
I would suggest if you're gonna trade, do it in the morning before lunchtime.
Yes.
If you don't, and because you don't want to spend all your day in the charts, guys. For years, I
No.
used to just freaking. Let me tell you, it didn't drain me because I was obsessed. Okay, but I would be in the markets from the time it opened until the time it closed, watching candles from the 1 minute chart, the 1 minute chart,
Yeah.
the 5 minute chart, just looking at
Yep.
movement, watching candles, obsessed
That's
with
me.
the movement, right?
Yeah.
But when you get caught up with, being obsessed with the movement, you lose so much time and so much energy. But don't get
That
me wrong,
is
you
true.
need that learning experience so
In
that,
the beginning, yes. Yes.
yeah, so you can see how patterns work. And that's why I always suggest too, is that if you're going to become a day trader, start with day trading,
Mm.
right? Start with day trading because day trading gives you so many lessons because patterns are constantly being played over and over. So you're able to like pick up the patterns and see how it works because
Yeah.
it's the same thing on the higher time frames. The only difference between the lower time frames and the higher time frames is once you get to the higher time frames, you have to be more patient. You got to allow the patterns to play out because the patterns can take a month, 2 months, 3, 4 months to play
Mhm.
out, right?
Yeah.
Versus if you're on a 5 or 10 minute chart, it only takes 5 to 10 minutes to play out a pattern. But
Correct.
what you do see is you see how the pattern plays out because it's exactly the same on the higher time frames, except it just takes more time.
Mhm.
So when you get into like holding long, it's more of having faith in yourself and being
Yeah.
confident in your analysis. And if you're confident in your analysis and you have faith in yourself, then you have the patience to allow the pattern to play out. Versus on the smaller time frames, you can see everything happening in real time, moment by moment. So it's easier, right?
Yeah.
But also at the same time, it's more volatile, because now, especially if you're trading options, because if you're trading options and you're only, taking a trade for the day, you're only purchasing a week to 2 weeks out. So you guys know the implied volatility on that, right?
Yeah.
The data on that. So like, it's a lot, because you're losing value on the contract and it's moving so fast. So if it doesn't go the way that you want, you could take a loss very quickly.
Yes.
You have to have stops. Anyway, we're kind of going off topic here. Anyway.
all in the learning, and that's good.
That's true. Yeah, that's true. But point is, Fridays are very unpredictable. And it's very volatile. So, just be careful here. But like, even looking at the 1 hour, you see this, guys, like, so this is just a small, I'm just looking at like the small details up here. We're definitely, it does appear that we're definitely coming here. Now, whether we turn here, I don't know, but look at this. You see how these 1, 2, 3, 4, 1, 2, 3, 4 hours, last 4 or 5 hours.
Yeah.
Last 4 or 5 hours, we held below 434. Now we're here. I mean, it's 816, but we're kind of down here. So for me, it looks like we're getting lower lows, right? Because that's pretty low, and then that's a little lower. We'll see how we close out at 9. I really want to see how we open up. I know we're probably more than likely gonna open up around here somewhere. Now, if we open up around here somewhere, this is around, say, 433. 433.
That would be like yesterday.
Yeah. Because see here, this was yesterday, and then we opened up down here. No. This was we closed here. Oh, we opened up down here. Yeah. So we closed here yesterday, and we're around like 430. Well, we said we're around right here right now. So, I mean, we could just consolidate in between these zones. You see here, right here to right here, right here to right here. Like, look at this, 1, 2, 3, 4 days of consolidation, 1, 2, 3, 4. So it's probable that we could consolidate between these zones before a decision is made. So,
true.
Yeah, let's take a look at SQQQ though, to see what they're telling us. You see how it goes in opposition of SPY here? Yeah, that's what I'm saying. It's a tug of war. It's like we're coming up on resistance here, but look, this is a low, this is a higher low, and this is even higher. And then we have money flow starting to come in too. So we're definitely creating higher lows here. And this is 20.07. Now this is resistance right here, because it tried to break yesterday and come to the next level, which we had it here. But you can see that it rejected this resistance wall. So this is still resistance. Only way it would be support is if it pushed past the wall and now it's sitting on top of it, but it's not. It tried to. You see where it tried to?
Yes.
But it rejected. And that's the same thing with SPY. SPY tried to push past that 436, but rejected.
Exactly.
So here they're rejected, so it's not resistant. So this is the resistance wall. So we got to push past this wall here. This is the wall we need to push past in order to, see us come into this next level. So this really is the zone that we need to hold on to. If we reject this zone, more than likely we're coming back down. And let's get a better support. Say about right here. About right there, that's your support. So this is your resistance, this is your support. If we can push past this, then we're going to take it to the next level. But right now we're very indecisive. To be honest, I can't even tell. I can't tell, because here Yeah, look, I mean, here I'm seeing a little bit of bullish momentum here
Yes,
with just these higher lows here, but I'm also seeing some bullish momentum in SPY as well.
exactly.
But I'm
Yeah.
also, but that rejection yesterday after market close, that definitely confirmed that we didn't break above 436. So I don't see us going to the next level yet unless we get some kind of crazy catalyst today and it just sparks the market and they just go. I do see a lot of tug of war though. I definitely see a lot of tug of war. Because see, even here, this is a bullish pattern. You see how you have it down here. When this flips up like this, and remember, we're above 50 right now. We're above 50. This is a bullish pattern. And so you see how it's the opposite. Remember, I told you, look, the last 4 hours, right?
Yeah.
And I was like, look, 1, 2, 3, 4 hours, and we hit a low, which is a lower low. Well, it's the opposite here. We're hitting a higher high, you see? So let's look at, yeah, it's very conflicting. It's the 15-minute, there's money flow, it's coming up above. I mean, it's more than likely probably going to take it back to this wall. Take it back to this wall. Once it takes it back to this wall, then SPY will be at the 433, I think. I think we said it was like 433 or somewhere around there. 19 to 20. Yeah, 19 to 20. See? This is 434, 433. So, and this is the 15 here. So if if SQQQ takes it up to that resistance one, rejects, and SPY will turn here. So yeah, apples. This is the same thing. They tried to burst through this resistance, and you see where the rejection happened.
Yeah.
That was a nice move on Apple yesterday, though.
Yes.
Look at the shit. Where did they take off? At the freaking support, guys.
Yep.
They take off at support. These zones do not lie. They don't lie. Right? And the same thing happened. They hit a high of 187.05, which they bursted through this resistance area and closed. That's why it was a little like, oh shit, bulls is coming in. It looks like we want to turn here.
Yeah, I was so mad yesterday. I was mad because it played out exactly. And I'm like, look at me watching that. I could have been playing.
You know what? Sometimes it's good just to watch and not trade, you know?
Yes, true.
And so like, so yeah, so we got the support, we took it back to resistance, but as soon as we closed yesterday, we know Apple rejected too. So this was that 187.05, that was the new high on Apple. And this is the resistance of about 186 here. And let's see where we're at right now. Well, we're a little bit below. We're at 185.89.
Like SPY.
Yeah. Apple's going hard though. Sheesh, Apple always goes hard though.
Yes.
They always go hard. That's why I like watching them, because it's like, for me with Apple, they're kind of like 2 steps ahead of SPY. You know, even like the way their patterns play out, Apple kind of helps me see where SPY wants to go.
Yes. And it's not as volatile, so which is good.
Yeah, I think their ATR, what's the ATR on Apple? Like
3, 4? Yeah, something like that.
All right, so this is rejection. So this is 1, 2, and this was a rejection. Because if we unless we open up above this level, if we open up below this level, it's a rejection. Yeah, that's insane, guys. This freaking run with Apple is insane.
Was massive.
The only thing I got today is just be careful because there's a lot of tug of war happening. You know your zones. If we get past this, we're going to create a new high with Apple.
Yes.
Push past this wall here. because this is the ceiling. There will more than likely new highs will be created. If not, we'll take it back down to this next wall. Does anybody have like any catalyst, any info? Because guys, you all know I'm very weak with catalysts.
I know the St. Louis Fed President Bullard, he already spoke because that was due at 5:15 a.m. But at 8:30, the only thing I see is S&P Flash US Services PMI and the manufacturing PMI. And then at 1:40, the Cleveland Fed President speaks. So that's it for today.
Yeah, Apple's trying to push though. Look at them. 1 and 2. They're trying to push this wall here.
I think it really wants to break through the 186 and changed for another breakout. But that's, for some reason, it's a hard resistance.
Yeah, it's a hard resistance. There's probably I don't know. I kind of have a feeling there is going to be another rejection.
Yeah.
Only because of this one. I mean, unless we break pattern here, but this SQQQ is. Where are we at? 319.83. So we're here. We're about right there. 3.
And you know what's crazy?
We're going to be opening up right here, which is going to be higher. SPY is going to be opening up lower.
Yeah.
What was you about to say?
No, I said, you know what's crazy? It's hard to believe that that's the same stock. But when you were analyzing it, it was like in the heading for 60. It was in the 60s, you know?
Yeah. You mean when
now
we were, yeah.
18.
Same thing with Apple. Remember we were below 150? And
yes.
Yeah, remember
140 even.
Trade,
yeah.
Going up and down before like the freaking crap.
The breakout. And you kept talking about the breakouts.
I mean, I knew the breakout was coming. That's the thing. Like I could see that what's happening now. Like I was telling you guys that it was gonna happen, that I felt that it was gonna happen, but it's just that we don't know when it's gonna happen. Yeah. And I remember I was getting frustrated.
Yes. Because yes, and I kept
what?
And I kept thinking no time soon because SPY just kept plunging and plunging. And then all of a sudden,
the breakout.
Yeah.
It's because it's only but for so long that it can continue to keep consolidating like that. Because once after the consolidation period, there's something is going to happen. It's either going to go up really fast or it's going to go down really fast. And based on what we were seeing, we knew that the breakout, well, for me, when I was analyzing with you guys, that it was go up, but we just couldn't determine when it was going to be. And it was frustrating to me because there was so many moments where I'm like, yo, this is it. And then the motherfucking shit rejected.
But I think you would have caught it if you had still been analyzing, because I think you would have
I did remember. I seen it coming. Remember?
Exactly. Because
I was like, yeah, I think we're breaking out.
Exactly. Pin it down because remember you were talking about long calls and stuff. And, so it's like
well, you know,
it wrote it together.
Yeah, it was bound to happen. It was just a matter of when. So, but yeah, you're right. And that now we're down here, we're way down here, but that's because we broke out in SPY. So the fact that equities broke out, it makes sense that SQQQ is going in opposition.
At the bottom.
Yeah, don't get me wrong, they're very weak. You know what I mean? Like they're very weak. We're just looking at today's movement, but today's movement, I'm not gonna lie, it's one of those days where it's really hard to see because both look indecisive right now. Like with SQQQ, it's hard, even though I know they're coming up on resistance, they've been rejecting. So they haven't even got close to this 200 MA right now.
Exactly.
You know what I mean? They haven't even got close to it. So, and now they're back here. So it's like, shit, if you are having a hard time breaking this wall, what makes me think we're going to be able to make it to the next level, right? Exactly. But the one thing is I'm seeing a little bit of bullish patterns here. You know what I mean? Where it looks like they want to rise and they want to come up, but overall they're weak. So even if they're showing bullish patterns on the smaller time frames, that shit don't mean nothing because they're weak. Just like in the opposition with SPY, just because I don't really see heavy bullish patterns on the smaller time frames because they're so strong overall, I wouldn't be surprised if they just bursted through shit. You know what I mean?
Yeah.
But we do got to take into consideration that these pullbacks are necessary and they also rejected. Because even though we pushed past through this level here on Friday, as soon as we closed, we rejected it. You know what I mean? So they rejected the resistance wall right here. This was the rejection. So the fact, and you can see once it rejected, it's taken it back down to support.
Yes.
Same thing here. This is why we choose zones. This is the reason why we use zones, because these zones gives us an idea of our entry and exits, okay? And these are zones for day traders right here, the zones that we put together, but you can create these same zones on higher time frames for targets, okay? Just takes longer for it to play out, but you know, either way, you can even see this shit like here. Like I've created these zones prior to this hitting. I have not touched these lines. They stay the same. And you can see here that once it got here, it rejected, came back down here. Once we got down to support, we came back up, rejected, and came back down. And with options, you can trade in both directions. So if you take calls here, you bring it up to here, get out, you can take puts, take it back down to support.
Yep, in a perfect world, that would work.
Whatever floats your boat. But yeah, that's all I got. I definitely see us coming back down here. I would just say be careful today. We're very indecisive, and because of the massive amount of strength, I would not be surprised if it came back up. But based on what I see on these lower time frames and the momentum currently right now, I am seeing more downward movement for equities.
Can we take a quick look at JP Morgan? And
what's their is it JPM?
I think it's JPM. The reason for that is because they had some negative news, and I'm wondering if it's gonna affect them.
Sheesh. That was a big ass bearish candle. I mean, when you see bears coming in like this, oh shit, they about to take over.
Yeah, because
what happened with them
yesterday? So they claimed that they accidentally deleted 47 million records and they were fined 4 million by the SEC.
Yeah, this is a pretty tough support area too.
So I thought
one
that
big ass candle. See this here? You see a big candle like this? This is showing me that the bears are here. Look at this candle here. And look at this. This is a continuation doji to the downside.
Yeah,
that's a big.
I figured as much. There's no way that they would not take the fall today.
Well, let's see where they're at right now. Let me see 139.6. Yeah, they're lower. 138.5.
Wow.
Yeah, they're coming back below the 200. Look, this is the 200 MA. This is your new resistance. What's the I have to look at their spread. You know what the bid and ask is on JPM for their day trading? Is it tight? You know
what the ATR is, you said?
No, the bid and ask. Like, is it a tight spread? Do you know?
Oh, let me just check. I don't think it is, but hold on. I could be wrong.
Yeah, this would be your next area of resistance right here, but there it looks
What is
like
the number? What is the number? What's the next resistance?
it's back here at this wall where they closed that. It's 139.6. Is now the resistance wall.
139.6. Oh, okay.
Yeah.
Yeah, because they're going down to.
Yeah, they're going down, so they'll probably come down a little bit more, come back up to the resistance, and because it just fell through support, tested as resistance now. And
Okay. This spread that doesn't look too bad. The bid and ask like $5 apart. Is that?
yeah, that's pretty wide. I figured it might be a wide spread because of what's their, be careful with them because when the spread is really wide, you don't want to get in on an automatic negative percent.
Right.
And what's their ATR?
That I don't really know, to tell you the truth. But I imagine that it's
Yeah, they're pushing past this thing going on. Yeah, they're trash.
man. And with that news, you would expect that because that
Yeah, but it doesn't look so bad here.
What time frame is this?
This is the monthly.
Or the monthly? Well, no, because they were doing really good.
I mean, this unless they're coming back down to. I mean, they could be coming back down. Look at this. Oh, I'm peeping it. Okay, so I want you to take a look at something, right? So we know catalyst drives, right? Catalyst driver. Okay, let me show you guys something. This is good. This is a good learning curve. All right. So catalyst, and remember, guys, and this is not a good thing, okay? But I'm very weak in catalyst, but I've kind of been spoiled because of my charts, like how I analyze. So I kind of really don't
because
need
you're
it.
right on the
You know what I
money.
mean?
So, yes.
Right. Because I can kind of see everything just based on like movement. Plus, I've had a lot of experience in catalyst, meaning that catalyst was one of the catalysts of why I fucking lost so much money. Okay.
Yeah.
So I'm going to tell you my experience. So the way my routine used to be is I used to get up in the morning, I would get my coffee, I would turn on CNBC, right? So I'm listening to all the news, I'm listening to everything's happening, what's going on. Looking at a few charts. And the thing about catalysts is they can get in your minds, right?
Yes.
So, it's on a subconscious level. So you hear bears. Shit is falling, right? You're hearing all of this. You're seeing the negative percentages on the freaking, S&P, on the CNBC. So what's in your subconscious? Puts. Right? Then the market opens and all of a sudden shit starts taking off and you're already in the wrong direction. And it's subconscious. You understand? So like I've learned to, so I've conditioned my mind to stay away from it and to only focus on chart analyzation. And I would put my own music on, right? I don't even mess with catalysts. I put my own music on and I'm flowing in my own world, right? As I'm analyzing. And that's what helped me, right? But you have to be able to balance, right? So what happened with me is I just straight took it out. You know what I mean? It was like, fuck it. I've had some horrific experiences.
Yes.
With taking some losses, right? So it could be like some trauma, a little bit of traumatizing or whatever. But, I do know like the most important catalyst like that we need to understand and know in what drives the market. So I'm not like naive to that. But the reason why I strayed away from catalysts was because of my own experiences. But check this out. So you got this big move here, right? You got this consolidation, but now we're on a higher time frame. We're on the higher time frame. So each of these candles represent a month, guys. They represent a month. Just like on the lower time frames when we were looking at the hourly, once it gets to support, it takes it to resistance. Once it takes it to resistance, it goes back to support and so forth. Look what we just touched. Do you see what we just touched?
Yep.
Now where are we heading back?
Yeah. Yep. Down to support.
So erase the news. Erase the billions of stealing, theft, identity theft, or whatever you want to call it. Erase all of that, okay? You've never even seen it, but that we touch resistance. And what is resistance? Rejection.
Yes.
Okay.
Yep.
Same thing. We opened up here. These are months. So we're in June. The same thing here. We opened up in last month. We opened up at resistance. And what did we do? We freaking
And back down
rejected
to support.
it. Yep. Same thing here. This is the month prior. We opened up at support. Right? We opened up at support. And what did we do? We took it back to
touch resistance and took it. Yes.
So you know, look, that's why I come back here to these higher time frames, because these higher time frames eliminates a lot of the white noise, a lot of the he said, she said stuff. He stole this, she stole this. You know what I mean? Like,
yeah, I didn't think of that. Yeah, that's so true. It's literally following the pattern no matter what. Yes.
Like, man, that shit is a psychological warfare.
Yes.
So just looking at it from this perspective, now that we see how we're consolidating between support and resistance on the higher time frames, now we can go back to the daily and we can look at it and say, oh shit, we're at a resistance area. I can see why we're reversing now, because we're probably going to take it back down to support. And where is support? Correct. Support is here at the 200 MA on the daily. Wow. So these are for more long-term holders. So holding this out for a couple weeks and taking it to support is ideal. This is actually a good entry for a puts, right? For a long-term entry. All right, so let's go back to the monthly here and let's take a look at it from this perspective. Now let's look at it as a whole. Let's look at it as, okay, where is JPM as a whole? What do we see with JPM? Now look at this shit. Okay. Now we're getting out of the little bit of white noise that's messing with us mentally. We don't want to be there. We don't want them to be controlling our minds, right? Yeah. So what are we doing? We're creating a double bottom pattern. Yes. Here's a flag. Eventually, it's going to keep going from here back to here until we break above. Why do I choose above? Because these are bullish patterns. These are bullish. This is straight bullish. Double bottom is a bullish pattern. This flag, this bullish is a bullish flag. Consolidating can take anywhere from 8 to 11 days on the daily chart, anywhere from 8 to 11 days, 8 to 11 months on the monthly chart. We consolidated with SPY. We talked about it, right? 8 to 11 months, and then we broke out, right? So consolidation, and this is the thing about long term. You have to be patient for this stuff. My mentor used to tell me, Des, don't take a long position until you've seen that position has been consolidating at least for 8 months. That's how I got that Netflix. Because when I went and I seen that bullish flag on Netflix on the higher time frame, I seen that they were consolidating for 8 months. And I'm like, oh shit, we're in a flag right now. We've been consolidating for 8 months. We have some momentum, and I caught the breakout. You know what I mean? So it's the same thing here. This just reminds me of the same concept. It's all about patterns, right? That you're seeing it from a more higher perspective. So it's going to take time. This is what I mean about taking time. You got to allow this to play out. So nothing is happening with JPM except they hit resistance and now they're rejecting. And you got to think, now this is when we get into supply and demand. Because now we're talking about institutional money. What is supply and demand in the markets? It's nothing where it's only where, okay, so the way the institutions work is there's automated orders sitting in demand zones. Okay. So these automated orders are sitting here in these demand zones, and as soon as we hit in these areas, it triggers institutional money. So what is our goal as retail traders? We want to follow the institutional money, right? Yes. So we're following the institutional money until it gets to the supply zone. So what is now? We got a lot of institutional money that's selling because they want to hit the lowest price. That's correct. Institutional money wants the lowest price. So they're going to sell once it hits this supply zone, and then they're going to take position again in a new demand zone because support and resistance will recalculate as the market moves. So say, for instance, we break out up here, right? So now we have the supply zone, which will be created around here somewhere. And then they want to get in at the lowest. So a lot of institutional money will now be sitting here. And once we get back to, say, it would be a demand zone at this point if we break out, then they got the money sitting here, and institutional automated triggers will order around this area because they want to buy low. Our goal is to follow the institutional money.
No money, yes.
Follow the institutional money. Where would it be triggered? It would be triggered around right now, around somewhere around this area.
Yes.
Something with the supply zone. That's why you see this massive amount of selling right now. It's institutional money, automated money here at a supply zone. Once it hits the supply zone, bam. Okay.
Yeah.
So yeah, that's the breakdown with JPM on a more technical analysis.
Yes, but it fits in with the catalyst too.
It always fits in with the catalyst, Ruth Ann. And you know what's crazy is when you learn how to read charts, you get the dibs before everybody else, because you can see what's happening, right? And most traders are relying on catalysts. They're relying on, you know, the distilling of candy and stuff like that. So they're trying to, you know, decipher through who stole the candy. Yeah. So like you're exerting a lot of energy trying to like break through that stuff. But for us, like we see it, like if, you know what I mean? Like I just looked at JPM, but I could tell you what the fuck is happening with them. You know what I mean?
Yeah.
So that's
so true. Yeah.
Little lesson there. Yeah. Yeah, well, thank you for bringing it up.
Thank you for going through that. That helped a lot.
Yeah. All right, guys. Well, other than that, you know, just make sure you're careful today. You know, if you don't need to be in the markets, I suggest that you just don't go in the markets right now, because there's a decision that needs to be made. And I would highly recommend just waiting till we get back to 431. And if we just break through that stuff, right? If we break through on SPY, again, you can see, like, just look at this shit. You can see the fucking breakout, like literally, like, let's erase all this shit. Like, it's just so clear. I don't know if it's just clear for me because I know how to go through charts and be like hit or miss immediately, just because my eye is conditioned. But look at that shit. You can just see the big ass breakout. You know what I mean? Like, how can you miss that shit? Okay. All right. So here, we're more in a tug of war, but I would like for us to come back down. Now, of course, I would like for it to happen. Doesn't necessarily mean that's going to happen, but it'll be more healthy. And if you can hold off and allow it to go and see if it comes back down, this is a better entry. If it does break above, you got to let it run until it comes and test back, because the thing is, you don't want to chase this shit. You know what I mean? No. Because once it gets to starts getting to these new highs, it can reject at any moment. And once the rejection happens, boom, it falls. So it's better just to wait for entries. You know what I mean? It's better just to wait until you get to like more stable support zones before you take position. And I think today it's just very volatile, even though contracts are cheap, they're cheap, but also they expire the same day. So it's not very valuable unless you go out a couple weeks or so. But a lot of people, they just want to bargain shop. And to me, that's just irrational. Yeah, you want to get a freaking $40, $50 contract just because it's Friday, but it's going to expire today. And on Fridays, we're always volatile. So yeah, you got to be careful. But anyway. All right, guys. Well, thanks for joining this morning, and
thank you.
I'll see you on Monday.
Thank you so much, Desiree.
You're welcome. Bye.
Have a great weekend.
You too. Bye.
Thanks.